Good morning, traders, and welcome to this pre-NFP intraday strategy webinar on SB Trade Desk. Today is Thursday, October 5th. Michael Boutros here with you this morning. Pete, Peter, Pooja, Steve, Tom, Ziad, Steve, we got the whole crew in here today. D, great to see you. Kelly, always a pleasure. Nick. So, we have NFPs on tap tomorrow. A lot to go over. We'll go over all the dollar crosses, dollar CAD, euro dollar. I do want to touch base again on euro Kiwi also, which is hugging resistance. We'll go over the pound crosses, pound Oz, pound dollar, obviously, and pound yen. We'll take a look at what the Aussie's doing. The levels in the Aussie's just been ridiculous. It's been just textbook. So we'll take a look at the Aussie levels and where we stand heading into the NFP. I do want to take a look at the crypto block, also reacting super clean at our levels here on Bitcoin and Ethereum. So we'll take a look at that. Ethereum, not so much the mover, but Bitcoin, certainly very clean levels. D wants to take a look at dollar yen. So the abomination is always on the table for you guys. And we'll take a look at that as well. Any other questions or trade setups you want to review, as always, feel free to throw them on the message board at any time. You might have noticed we had some site maintenance yesterday. We did have a little bit of a glitch. I lost all the text on the October 2nd update. So if you click on that, obviously you're not going to see the text anymore, but I was able to recover the charts. I think Jamie also lost the October 2nd and 3rd swing update. So apologies on that. Minor glitch somehow. And but the issue has been resolved with the lagging. So we should be up and running full stream now. Okay, so if you have any questions, feel free to tweet us at SB Squawk, obviously at any point. But largely speaking, not much of an impact. Okay, so non-farm payrolls are on tap. Here's what we are looking for. Expectations are calling for a print of just 80,000. You might be asking yourself why. Again, those revisions were revised to the downside on account of the hurricane and the impact that it had both on Florida and southern states in general and Texas. But the expectations are minimal. So, in my humble opinion, the risk here is on a beat as far as price action. And what would that offer us? Again, in my opinion, if we were to get a stronger print yet tomorrow and the dollar were to spike higher, could be an opportunity to fade that back to the downside. The dollar's at resistance. We're going to look at it on the weekly charts, daily charts, intraday charts. You know, there's resistance where we're at. So could it spike a little bit higher into 94? Absolutely. If that were to happen on NFPs, and you're flat, great, might offer some fresh entries. If it does move higher on tomorrow's print, I would not chase it. And with the same respect, you know, if we have already put in that high in the dollar index and we get a weaker print, you could see the downside further, perpetuated. So just the expectation. The risk for the bigger move would be on a beat because expectations are so low. Also, pay close attention to the unemployment rate. Obviously, is supposed to hold at 4.4%, but pay close attention to the labor force participation rate. This actually has been a decent print at 62.9, which is kind of pathetic, but as of late, over the last couple of years, this is actually decent. So if we were to get a downtick here, you know, again, that would be seen as a negative. Even if you see unemployment downtick with it, that would be, you know, kind of inconsequential. Because again, if the labor force contracts, you'll see that artificial downward pressure on the unemployment rate. When the labor force expands, more people are entering labor force. Sometimes that'll give you an upward artificial inflation on the unemployment rate. So unemployment, if this upticks, for example, to 4.5, but you see here this pops up to 70.1, that would still be a positive. Okay, that would still be a positive. That means there are more workers returning to the labor force. So little caveats here in tomorrow's report to keep in mind. We'll keep you updated, obviously, on SB Squawk as the release comes out, but here's what we are expecting as of now. Okay, print of 80,000, unemployment at 4.4%. Obviously, average hourly earnings, the year-on-year will be critical to determine, again, if we are starting to see some wage inflation start to creep into the markets, which is what the Fed has been looking for. So, you know, any upward revisions in that number would be also seen as a positive for the greenback. Okay, so enough with the fundies, Boutros. We're not here to see all that. Done with this. Okay, let's jump into the charts. Oh, good question. Was there news out on dollar CAD? It's popped. So dollar CAD, actually, you have seen a little bit of recovery. I think that's mostly to do with the dollar, Kelly. But for the dollar CAD, remember, tomorrow is also CAD unemployment. So you get the numbers released at the same time. And again, the miss or hit on one or vice versa can really not offer some very strong price action in the pair. Love those Fridays. Be very cautious. We're already holding shorts in that against the high. Even if we were to spike higher, I'll show you again some levels today. But Kelly, absolutely tomorrow we have to be very mindful of the news out of Canada, which is going to be coming out at the exact same time. So any exposure on CAD, you'll be wanting to watch that tomorrow. Okay, so let's jump into price action. Here's what we're looking at. Dollar index, and this is the tricksy part. I'm going to take you back. I know you're probably bored of seeing this chart, but I'm going to drill it into your head as long as I can because what's most important here is the weekly close. Okay, we brought into our focus last week the low week reversal day close. So it's a mouthful, but that we made for last year, 2016. Here was the low week. The close of that is right here at, I think it was 93.89, 80 and 89 exactly. Okay, just above that is basic slope resistance, the median line for the current operative structure we've been following off the 2015 high, 2016 low, this year's high. Okay, nice median line action here, perfect pivot, break saw acceleration, resistance, break saw acceleration, support, initial resistance. Not to mention, again, that longer term yet red line you're looking at, those slopes, which originated off the low from 2011, also converge right around here. Now, we're above it right now, but my point is this week's close will be paramount in trying to determine, basically, where we should be going from here. Okay? Questions on the dollar index, at least on the weekly chart that we're looking at. We did just get some data. I'm hearing Pooja saying, oops, just got stopped out of my dollar CAD short. Thank God I had moved my stop to break even. We did get international merchandise trade, but that's nothing. It's a very, very low grade print. It did come out much worse than expected at negative 3.41 billion just now, but inconsequential print, Pooja, and I would be still cautious. Take a quick look at this. You sparked my interest here. Okay. Yeah, so we'll keep an eye on that. But broadly speaking, the whole point is the dollar, right? Still has some more upside to go. So what I wanted to highlight in this, so the weekly chart, right? Keep that level in mind. Again, on a close basis, this is the critical region for the weekly close that we need to be focused on. On the daily chart, as I said earlier in the week, or as I said last week, once we pop through, we could see that 93.50, 94 level pretty quick, and I still wouldn't be too surprised to get a poke into that region. Okay, that's the median line that we looked at in the weekly chart. Also, it's a basic 236 of the yearly range from the decline off the high. You also have the highs they made in August, and both of those converge right here around the 94 handle, 94.15. Again, on a reaction tomorrow, on a spike, if the NFPs come out higher or stronger than expected, look for a reaction there, basically just above 94 handle. Another note that I've continued to watch, guys, over the last couple of days is momentum's inability to break above 60 here. Something you want to pay attention to, again, as well on a closed basis, absolutely paramount. And a very strong tell. If we were to top 60 here on a closed basis, and we were top 94 on price action, that would change our opinion on the dollar, broadly speaking, for a medium-term, more meaningful rally to the upside. As it stands right now, we just got to recognize that the dollar is coming up against some serious levels. Okay, intraday chart looks like this, starting to get a little messy, but another level that comes up at 94 is, or 94.20 even, is 1618 extension off the low. So again, what I tend to do when we're heading into these major event releases, guys, is I want to see what the extremes are, because sometimes some really sweet trades happen when you get those emotional spikes and the market just runs, and all of a sudden the whole market thinks we're rallying, and you get all that flood in, it spikes into one of these critical levels that we've been highlighting, and then as soon as it pulls back, if you see that strong pullback and reaction, jump in with a short against the high and see if you can play the downside swing. That's how I do it. And I try to be, again, you want to use lower leverage. You want to be very nimble if you're trading like that. But this is why we map out the levels. Even though, again, I'm not a big fan of a dollar rip. I kind of wanted to see the dollar plummet from here. But got to have a game plan heading into the release. So if you're not holding any exposure on Dixie, watch 94 for resistance. If it breaks again, the overnight lows we made, you can see here yesterday in the U.S. trade, we made an outside reversal candle into the open of U.S. trade, right off the low here. So that's kind of still constructive. But I won't be getting on the long side of the dollar after this rally all the way up here. So I'd rather be looking for a spike high to fade. All right, the break below 92.50, 92.95, basically the 93 handle is what would be the onset of a much more significant either continuation or drawback here in the dollar. So that's sort of the support break that you need. That's the objective monthly and weekly open. It's the 2016 low day close. It's loaded there. So 93 key support. Okay. Any questions on dollar index? I think I beat this one up to hell to this whole week. So if there's no other questions here, let's jump into dollar CAD. That's number one. Number two is the loonie. Here's what loonie looks like. Okay, and here is what we've been looking at with dollar CAD. Last update was right over here. Okay, and we were just straddling that 125 handle. Now, obviously, you're seeing the rally here. It's sort of a ripperoo into the open, so watch this one closely. If we do max the highs, okay, there's really nothing, in my opinion, to stop this thing from going into 126.09. Not our favorite scenario. Obviously, we're still, short against the highs, so we're looking for that to hold below 25.40. But at the end of the day, if it pops, you do have that range here for 60 pips for a move up into that upper parallel. Now, daily chart looks like this. And while I'm not a fan of over cluttering your chart, I do want to just take this same slope that we've been working with. And you've heard me talk about this slope for days now, so I'm not going to repeat it. But here, if we take a same slope and extend it off this high, it might want to say, well, let's see if we get a reaction off that level. Don't want to get too excited still. 25.50. Bottom line, guys, I'm not really interested in buying dollar CAD, even if it breaks out, because there's still looming resistance just higher. Same thing that comes up on the intraday charts. Okay, that 26-24 barrier. Remember, this was the 764. That's why we were talking about 26 on the report. That's what this is. It was 764. But to keep in line with slope, if you push it out to 786, it's 26.25. But you get the picture. This is the risk on a topside break here in dollar CAD tomorrow. I'm expecting a larger range on this just because of the double whammy report for dollar CAD for the employment data coming out of the U.S. and Canada. So again, another reaction. If you were to get that spike emotional high, 26.24, even 26.60, okay, to tag that slope, which is right here, okay, might be a nice fade opportunity. Exhaustion kind of blow off. Momentum, holding 60 on resistance on the daily chart. So something to keep in mind. If we were to push through 26.60 and momentum closes the week above 70, we would have to change our opinion on the broader picture here. But all things held constant, looking for that exhaustion high near term. Questions on dollar CAD. This is a big one tomorrow. Interim support still 124.15, 124.20. That's the level that would give us the validation for a more significant turnaround in price. And you'd be looking for a drop basically into 123 is the major, major level you'd be looking for down here. All right. Questions or comments for the dollar CAD game plan tomorrow? Again, feel free at any point, guys. I do see a couple new names. If you have any, or you want to save any of these charts, there's a camera button in the top of your GoToWebinar screen. If you click on that, you'll be able to take a snapshot of any of the charts you see presented. Okay, so that's the loonie. If you get stopped out on this short above 25.40 and I move above 25.40, sit tight, see what the reaction is tomorrow. 26.25, 26.60 area of resistance where you might find a little bit more of a significant hold. On a downside move, I would be looking to do something here. If it kind of collapses tomorrow, I don't want to jump out too early and get too excited. Watch for a reaction here. A move right through, just hold it. If it cracks right through that, and see if you can't get that 23.50, basically the 23 handle, like I said, kind of the sweeter spot on this move. Okay, moving right along, euro dollar number 3. Obviously, always a big mover on NFPs. We didn't quite make it into support, but at the same time, there's some reason to be cautious. By the way, dollar CAD on the weekly, same thing. I showed you this chart yesterday. Make sure we hold below this red line on a weekly close basis to suggest, in fact, that the downtrend is still intact. So again, that's why another reason tomorrow, really got to see these gains capped pretty close to where we are here. But euro dollar on the weekly, I showed you this chart as well. So I think it's what's the high here? 117.14 is the high. Okay, you have the 50 line of the ascending median line formation that we were following off the 2015 lows. Really nice confluence spot. So this is why we were looking for some support possibly in the euro to begin with. And on the short side, I kind of lost interest once we kind of spiked higher and rebounded here. So here's what it looks like on the daily chart. Another thing that highlights on the daily chart. So here's the median line we were just talking about on the weekly in blue. The near-term ascending median line parallel off this year's low. The 50 line there also converges. So we've been looking at price action basically hold a really tight range below the monthly open, which comes in right around 117.88, 117.89. And I'm still looking at a little bit more of a key support barrier at 116.90. That'll be a basic 236 retracement. And then 116.16 is the 2016 high, just swing high in price. So do you play the short side? I'm kind of the opinion that you look for the spike lower to buy at this point. But near term, it could give you a little bit more of a drift. Now, again, Jamie's looking for entry at 17.30, so we're basically there right now. He likes to trade higher against 116.90. So basically against the weekly low. So what Jamie's doing on the swing trades right now is we're banking on a break of the opening range for the week to the upside. So here's your weekly open. We swung to a low. Our stop is against that low. Our entry is right here. So we do have a very good risk to reward. And let's see if we can't see that upside hold. I mean, again, even if you look at this on the near term, this is a 240-minute chart. Yeah, it's a brief break below that 50 line, but quick recovery. Let's see if we can't get that quick recovery again today. If we were to drift lower, again, the risk with a break of the lows here is 117.89. That's a soft target at this point because parallel comes in right down here alongside the 1618 extension and former swing highs from 2016. And again, that highlights that 116.21 level. So both levels of both sides of the market or the levels on both sides of the market pretty clean at this point. And we just want to see a break. You know what I mean? Ideal scenario is that this holds this low that we made yesterday and you see a break of the weekly opening range high. That's beautiful. We were looking for a target at 1894. Honestly, if it were to break with some conviction above this region, which is where we have our first limit or half of the trade on the swing setup, I would be looking for a rally right up into the 618. And that comes in alongside slope resistance right around 1941. Okay, downslope resistance and upslope resistance. So again, super clean on the levels. Let's see. Oh, that's the monthly open, by the way, guys, 18.99. Let's see. I'm sorry, that's not the monthly open. That's last week's open. We don't need that anymore. Whoops. There we go. All right. Those are the euro levels we'll be working with tomorrow. Here's the 120 looks like. Pretty lackluster this week, but again, start of the quarter, start of the month, big news on tap later this week. Not too surprising. Now you're going to start to fall into that, again, pre-NFP, pre-major data release lull, heading into the close of the US trade, heading into the open of Asia. So, don't get too ramped up and tangled up into too large of a position. Hopefully tomorrow we'll get that entry and that spike that we're looking for. Questions on euro. Now, interestingly enough, a trade I am also interested in playing alongside of the euro, and this is kind of where I'm torn in between. We highlighted the fact that Kiwi dollar was basically trading. The intraday chart had nothing for us, but we talked about this. That Kiwi dollar is basically trading into an area of support here. If we see a further downside break and deterioration, Kiwi weakness, that might further give us a nice play for the upside and even really exacerbate upside on euro key. So I do want to take a look at that trade, which continues to hold formation pretty well. And here's what euro key looks like. Okay, so here's what we looked like earlier in the week. And the major premise, again, the daily chart hasn't changed. We're in a very, very clean ascending median line formation. The median line's been pretty decent on pivots here. Just a little bit higher, okay, from where we opened up the month. Just below that, you have kind of confluence support, former swing highs, 50 line, which has been even cleaner. That gives you 62.27. And basically resistance right here into 64.90, basically the 65 handle. So that's the range break we want to see to kind of clear the way for the direction this month. Momentum isn't really giving us much, pretty much flatlining since late September, so it's not really much to tell there. So the daily chart is not much really to get excited about. Take a deeper look at price, though. Things start to get very interesting. So we were looking at this descending channel formation or descending pitchfork for a couple of weeks. And we specifically really loved the rebound that we had off the low parallel and played a little bit of that long into the upper parallel. Things kind of went into a chop fest here, but early in the week, we noticed this formation and said, hey, look, the rally looks pretty good. We broke the weekly opening range highs. That keeps the focus higher, but we came into resistance. Look for the pullbacks to get long. It's kind of the best way you want to play this. Initial support at the weekly open. We kind of came basically right into that level, literally. Might have missed it by 8 pips before rebounding sharply. Again, 164.32 still holding as resistance, but even on these spike highs, guys, look how it continued to follow that slope. I know this might look like a messy chart, but kind of just focus on what's happening on the near term. So, long and short of it is, upside break of an ascending formation typically will give you a very strong move. So if we do see euro rally through resistance, rally through these highs of this slope, you have a quick target at 64.80. Wouldn't really worry about that one. This is kind of the big boy up here. That basically takes you into 65.50, 65.60. It's a 100% extension. So even if this just is a correction, 2 equal legs up, 764 retracement off the high, upper median line parallel. Okay, in time, that could stretch out even further. And in fact, if you bring this into a 786, it could take you, 65.70, 65.50, so a little bit bigger of a range. It's a larger range ATR, so you got it there. But certainly a trade I would be interested in if, for example, we were to get a drawdown and see some sort of reaction near support. I'm not really comfortable drawing a retracement of this advance, guys, because you don't have any way of knowing that this is a concrete high at this point. But if we were to get a pullback deeper, take a quick retracement and see what lines up with the parallel. That might be the best spot to kind of look for some support. So I'd be looking for entry there. Or if we break out, I'm not going to chase it. Look for the pullback into that parallel again, then take the long targeting 65.60, 65.70 on the upside. So very interesting trade here on euro. So you have the euro dollar and you have the euro kiwi, both of which kind of want to keep a close eye on as we head into tomorrow. Now, if kiwi dollar just breaks down, okay, and euro, euro doesn't do much, it still could keep this thing afloat. Might not offer any price action that we want to trade, but end of the day, stay constructive while within this formation. It's been pretty clean. Questions on Euro Kiwi rather. That is number 4. Quick segue back into the dollar crosses. Pound. Let's get through all of these. Sterling has been a little bit of a mystery to me. Remember early in the week. Let me bring it to the daily chart and show you why I'm a little concerned here. So it's at the next level. Remember early in the week we talked about, and again, the charts, I apologize for this, for the pound update, lost all the text on it, but just to show you where we were, this was sort of the spot I was looking for to see some serious support. And I thought it would be a really great entry to get on the long side. At 32.16, it's a basic 50% retracement. On the near term, we had some slope off the lows there. Here's the 240 minute look like. Really nice spot. Some former swing highs. Well, we've dribbled below that. 31.58 got taken out, and basically now we're approaching the 618 retracement. You have the 50 line, and that's basically just right around 31.11. Okay, 31.20. And that's basically what we're doing now. This was our near-term bullish inval. So the fact, right, any long positions you had against 32.16, as soon as that broke, you're out. So I'm not doing anything here. I don't have anything left on the table for the pound. Now that we're moving lower, again, you look for NFPs to possibly offer, the spike low exhaustion that you're looking for. But at the end of the day, it's in oversold territory. I'm not going to try to call low on this. I just do want to highlight that 31.11, 31.20, 31.30 even, this spot right here is the next level of interest for support on the pound. Below that, 30.20, you have another 90 pips to go. It's a basic 38.2 retracement of the entire advance. You also have the 100-day moving average. Okay, not my favorite scenario, but if it were to break, that's your next downside target. As far as resistance is concerned, well, I'm going to clean this up just a little bit. I'm going to dump, well, that is the high, so I'll leave that. It needs to be a break of this high. So bring down, okay, that's your new bearish invalidation level. We'd need to clear above that 32.90, 32.70 region to get validation for a reversal. Not really gonna work here. Kelly saying dollar CAD 25 vote. Yeah, I see it. I know. Oh well. See what happens heading to tomorrow, guys. This is why I'm always super cautious early in the weeks and the months and the quarter. Like on the first few days, you get this kind of price action. That's why you got to play it a little bit closer to the chest and stick to your guns. Even though this intraday price action whips us out of some trades and might even invalidate some near-term swing trades, we're still within the near-term structure we've been looking at. There's no broader change. You know what I mean? Again, as far as these spike highs, it's the weekly closes and the daily closes that are going to matter. So stay on the sidelines. Look for an exhaustion somewhere near 26.25, ideally 26.60 for a larger pullback here in dollar CAD. Okay, any questions here on pound dollar? Again, we came back dollar CAD like 4 times, but we'll keep coming back if you have questions. Some of the other pound crosses that we've been following, I do want to take a quick look. Number 5, number 6 will be pound Aussie. Here's what this looks like. So the levels have continued to pan out pretty well. And remember yesterday I was talking about I got really shaded out because the break didn't really give us the run we were looking at. Well, kind of solidified that yesterday and in an overnight trade even. So we did get that final rejection push lower, okay, which was a nice 70 pip drop. It reversed, came right back up, and guess what we did? Right at resistance, outside reversal candle. Absolutely beautiful. And here's the drawdown, the drawback to the downside. Hopefully to see a little bit more of a continuation. Guys, if you're holding shorts on pound Oz, I would be cleaning them up around here just on account of the radical divergence that we're seeing. Remember, when you see these divergent signals closer to 50, those tend to be stronger signals, not the ones all the way down here and all the way up here. So I do want to see what happens. I want to see this stretch lower. Ideally, kind of have a, if I was in it, just a disclaimer, I'm not, but if I was in it, I'd be putting a trailing stop on it because if it does drip lower, look for a tag of that trend line. At the end of the day, if we were to breach above 169 again, 169.07, you would, at that point, you'd have to change your opinion on things. Questions on British pound Aussie? The daily chart, next downside critical support zone would be down here. Okay, and guess what? You have the 38.2 retracement. $167.20 is what? 167.20 is the 2016 August low. Nice pivot high. And guess what else is there? 100-day moving average sneaks right into the same pocket. Bottom line, bearish invalidation against today's high. Near-term support, 67.31. That's where I'd be looking for possible entries if we do get down there on a rebound play. And at the same respect, if we were to break above this, again, I'd favor the long side right back into that 2017 open target. Pound Oz. Looking for a dip to buy or a breakout to look for the pullback to buy. All right. Pound yen, number 7. Here's what pound yen looks like. Here we go. All right, so into a nice support target right now. And this is kind of what I wanted to highlight real quick. Here's what pound yen looked like on the report a couple of days ago. We were talking about the reversal off of a beautiful resistance confluence. Now, we did see a false break. It even made a daily close above that. But obviously, we talked about the magnitude of the pullback, and where we closed the following day really kind of sealed the fate on that weekly pullback. We never got a weekly close above that 152 target. So on the initial pullback, inherently, former support, or former resistance rather, should be a little bit of a near-term support target. That's 47.86 into 48.42. We're basically attempting to push below that zone right now. Okay, on the intraday charts, look like this. You had a nice clean median line formation here. A little bit of a false break again above that 50 line before coming off. Perfect tag of the median line as support. We're looking for that breakdown again to get that initial target at 48.50, and then down here, as we noted, that 47.86, 48.40 level. So basically, there's no, you get the point. Bearish invalidation didn't even get tested, and we continued to dribble lower. Again, here's what the 60-minute chart looked like since the start of the week, and here's what it looks like now near term. Again, the 4-hour. Near-term channel support, if this is some sort of bull flag scenario, parallel resistance, extended off that swing low, converged right here. That's Whoops. Basically where support is. Now, if we see this thing dribble or push lower, the break of a descending formation to the downside, we'll likely see some serious losses. I think you'd hit 146.70 and 146 before you even blinked. So this is kind of a scenario right now. If you're holding shorts, I definitely would be doing something, taking some off, bringing stops to break even, and leaving a little bit on the table for that drop. If you do get that drop, you have pretty clear-cut targets down here. If you're looking for fresh exposure, I'm not doing anything on the short side here. Okay. In fact, again, I actually want to see a rebound here. You got to drop your bearish invalidation at this point to this zone, basically the swing highs that we made yesterday, 149.90, let's call it. Topside break above that, would validate resumption of the trade. But you are at support heading into the open. Something to keep in mind there. Questions on pound yen? Widowmaker still looking pretty clean here. Again, coming into some areas of support. The daily close is what's going to matter. If the spikes here below and then we close right within, that would be a hold of support in my humble opinion. But this is sort of near term, pretty critical. Pretty critical. You got another 100, 170 pips to the downside if it breaks. Pooja says pound yen has a tendency of coming into levels just before major event risk. Basically, no chance of touching it. Yeah, I laugh when I call it the Widowmaker, but that's like literally what they call it on the desk. Every desk I've ever been in. It's kind of like the common saying around here. Pretty outsized. You definitely see big swings, larger ATR, and when it chooses direction, boys, it can run. So keep your eye on this, especially heading to the close today. I do suspect you'll probably get a dribble lower here and fake some people out, but at the end of the day, I want to be northbound of 47.80. Okay, that is pound yen. Back to the dollar crosses. NFP's on tap. Where am I thinking? Number 8, Aussie. Here's what the Aussie looks like. Ridiculously clean levels, especially on the lateral. It's just been like ping pong on this one. So if you recall, again, Aussie dollar from earlier in the week. Here's the update from the 1st. And as we were opening the week, we said risk is still lower here. It keeps the focus lower, but we're looking for 79.24. 70. Whoops. 77.35. Basically, that's where the low was. The 78 handle was that 1618 extension. I'm sorry. A little disheveled here this morning. So we noted that 78.04 level that it rebounded. Ultimately, we're looking to get short again, expect sideways to higher price action. It's exactly what we've gotten since the start of the week. This was the Sunday update. So we came into the start of the week right here, trading around 78.30. You saw a little bit of a dribble back into that 78.04 level, and then we've drifted higher where it was resistance, 78.76, 78.76, right on the mark. We had to adjust this, obviously, to take into account the new low, and that's why you see the variance in levels here, guys. Always make sure that we're keeping our levels up to date. So after this thing dropped into a new low, you just take the retracement to that new low. Again, it brought the target down to 78.65. It's exactly where this thing capped out, pull back, here we are again. So you're pretty much almost unchanged on the week, like 30 pips lower. Aussie on the weekly basis has been a chart we've also been following very closely. And the close here is going to be pretty important. If we were to close below this level, you would risk further downside for the Aussie, which is why I'm still thinking ultimately we want to be selling this thing. Downside targets, that's what I was noting earlier, would be that 77.49, 79.35 level right here. That's a nice confluence region of the 2016 high day close, and as well as that March, basically the 2017 opening range high for Aussie. which when we broke was a huge region of acceleration and has been a major pivot in price. So that's sort of where I would start to look, or that's what I'm targeting on any short exposure here on the Aussie for a move lower. Now you're probably thinking, well, Mike, that's a lot of dollar strength you're expecting there, right? Yeah, you don't want to take a carte blanche opinion on the dollar in general, right? Take every trade on its own merits, but based on the technicals on this thing, I do think that there's still a risk for a move lower. Questions on Aussie dollar? Okay. I do want to cover Bitcoin and Ethereum. Before I do, I'm going to take that question from, what was that, on D? For dollar yen. Here's what dollar yen looks like. We'll do that. That's number 9 for D. It looks, well, the broader picture. Again, let me take this out to the weekly chart. It's always good to keep these in mind early in the quarter, guys. And this is basically what I'm looking at for dollar yen. You're going to see volatility tomorrow in dollar yen. It tends to be a very strong reactor due to its correlation or tendency to move with U.S. yields. So obviously, it's a very strong reactor to dollar data or U.S. data in general. That being said, how you trade it from here? Well, if we do get the broader dollar pullback that I would like to see, you could look for a near-term short play here, just on account of the fact that we're coming to this basic trendline resistance off the yearly high. Not justification jump into a short right off the bat, but also momentum has been holding between 40 and 60 essentially for the larger part of the year. You know what I mean? So it doesn't give me too much confidence on a broader directional trend bias. If we were to break higher, cool. This is only a 2-point touch though. So even on that premise, I don't really have too much conviction on playing this. On the near term, again, we've been working with the assumption of this sort of slope and maybe why we're seeing a little bit more of a resistance hold here that dribbled a little bit higher. Support, you have a swing high here, but you also have the 200-day moving average. That's the 112 handle basically. And I'm just looking for a break of the monthly opening range, honestly. This thing actually did give us a decent opening range play for September. September dropped into a low pretty early. You made that low in the 7th. You held the high only for a day and a half before the next day plowed right through and gave us the late month high. So kind of hoping the opening range for the month gives us something to do. It's been super tight to start with. And again, 111. 111.50 or downside targets if we were to break the weekly opening range lows, the median line right here. So initial support, okay. On a spike, if this thing were to rip higher, 113.60 is just a soft target. I'd be looking for possible resistance near 114.60. That's the bigger one. That's the entire 618 retracement of the yearly range. And that major pivot in price. I called the highs for May and called the highs for late July. So that's sort of a sweet spot for me if we were to break higher. On the near-term slope that you're looking at with the 4-hour chart, and again, this is just off the lows from late last month, or late August rather, and last month, you can see that the upper parallel converges up there as well, basically into NFPs tomorrow, believe it or not. So wouldn't be looking to play it along, but if we got the rip higher, 114.36, 114.16 area of resistance possible for entry on the short side for dollar yen. But not my cup of tea. Not my cup of tea. So Kelly, hope that helps. Or excuse me, this is for D. D, hope that helps for dollar yen. Hey, you're more than welcome. Okay, quick segue into some of the cryptocurrencies, and I do want to just cover gold real quick. It's an important trade as we get into those major economic releases. But Bitcoin, wow, it's super clean, super clean. Now, again, if you're trading this on the exchange through, BitWallet or all these types of things, you can't really get in and out of these positions as easy. You probably already know that if you've tried. But if you're trading this on a CFD basis, if you're trading offshore, it's been ridiculously clean, and it kind of surprises even me because it's not such a liquid market, in my opinion. But it trades clean. It trades clean. So here's what Bitcoin looked like. This is a trade again that we also highlighted. What day was that? Right here. So the daily chart highlighted this confluence region of resistance, and that's what initially turned our shifted our focus for the threat for the downside move. 42.12, 42.25 on a daily basis, we wanted to see that hold as support. Okay, if this was going to give us a nice consolidation breakout, the broader upslope was strongly defended here. Okay, and on the pullback, 618 found strong support, launched it higher. So we're still within the confines of the descending, but this is why it puts so much emphasis on a breakout here. If it does, quick target, 4,600, 4,661. A break to the downside, you're looking for a possible drop to the median line. Bullish invalidation for the entire trade is now brought up from that, basically that 30-30 level to right here at 35-37. Again, not our favorite scenario, but we have to have a game plan. So the game plan on the intraday basis was the fact that, look, we're holding within this embedded slope. And that highlighted critical support, or at least near-term bullish invalidation, at 41. As long as you stayed above 41, you're looking for an entry to get long. So what did this thing do? Well, here's what it did. You did see a dribble below 42.12, 42.23, but guess what? We didn't close below it. So then when we opened today and we even pushed a little lower, look where we found support on the intraday. Right along the lower median line parallel, just ahead of that bullish invalidation level. So had it sunk below 41,000, you got to change your opinion near term. Okay, you have to look all the way down here at 35. Excuse me, 4,100, not 41,000. But you know what I mean. So at this point, you can't call this, you can't just get super bullish yet because you're still within the confines, but it gives us further clean price action to know what to expect. Look for a break of near-term confluence resistance right here. Okay, 43.16 to 43.80, 43.90, a 30 pip region. If we were to breach that, you'd be looking for just a soft target at 45.50. The big boy is up here at 46.64. So again, just be objective. This would be, in my opinion, again, a clear-cut breakout of the descending formation we've been working off the early highs. And certainly a break above this region would mark continuation of the broader ascending formation that we've been in. Okay, does that make sense, guys, on Bitcoin? It's just stupid how clean these levels are. It kind of gets brushed under the table sometimes because of all the headlines and all the quote-unquote fundies, which make no sense how there are any fundies in this asset per se. But hey, let them talk, let them say what they want to say. Feel free to take a snapshot of this. Any questions on Bitcoin heading to the close of the week? Pretty clean. The other one is Ethereum, nowhere near as clean, but I just wanted to show you the fact that, look, the daily chart has, well, first of all, we've been in a pretty clear-cut range, but the daily chart has very clear-cut highlighted levels. We went over this yesterday, so I don't want to bore you guys again. But 312 into 320, major resistance near term. That's the breakout zone, as it were, that we would need to clear. Next subsequent target would be up at 350, so a nice $30, $35 run to the upside. Near-term support would be 271 into 274. It's the 100-day moving average. Former swing highs, perfect touch of support, acceleration on both sides. Look for that as support. If you give way there, broader bullish invalidation is resting down here still at 234. It's interesting because if you guys remember last month, that was our bullish invalidation as we were playing the pullback. We wanted to see that hold. We got faked out with the daily close below, but the next subsequent day certainly reconciled and kind of made firm that that this thing still had more upside to go. So looking for a pullback to get long off one of these levels, a break above here, you'd have to be targeting again that 30-50 region to the upside. All right. Any questions on Bitcoin or Ethereum? That is 10 and 11. Before you go, can you take a snapshot of euro dollar, says Kelly. I was watching. Okay, I got you. Don't blame you, my man. It happens. What can I tell you? He just lost focus there for a moment. So Kelly, here's euro dollar for you. Which time frame did you need? And here's the daily. Okay. And here is the 4-hour. And here's the 120. He says, nice, got him. All right. All right, so that is all I have on here. Last thing I want to touch base on, just because there's going to be a lot of commotion about it. And look, it's made some sizable moves, gold. It's not going to go under the table for sure. But here's what gold looks like, at least heading into NFPs. Look, at the end of the day, you haven't really been able to make much progress below the 1270 target. Remember, our broader outlook for gold on the longer term prospects remains constructive, actually. You might have seen a quarterly forecast I recently posted on Daily FX. I encourage you guys to all go take a look at that. A good friend of mine, David, writes the fundamentals for that report. So there's a lot of different things to look at. At the end of the day, 1240 is my line in the sand. Okay, if this thing were to break sub 1240, it would change the technical picture near term for sure. I don't, not my favorite scenario. Do we head lower? You probably see some recovery on this if the dollar finds some support or continues to find some support, and turns from resistance like we were looking for. You'll probably find the recovery of this. Do we spike into that level first? Do we see some sideways action and move lower first? I don't know. So I don't really know how to trade this on the near term, and especially if you look at this on the intraday. So first of all, let me show you here, 38.2 retracement longer term, 200-day moving average, nice little pad of support, seeing a little bit of a bounce there. Monthly open resistance has still been in play. Here's the intraday. Okay, so here are the levels I'll be looking at. Focus range for resistance is 1290. That would necessitate a break of this descending slope, gradient. There's nothing special about this slope, to be honest with you. It's just 2 touches on the high, not even a touch on the low. But that's why I would have it above Friday's high from last week. That's what I would need to kind of validate the breakout to the upside. That's 1290. Near term, again, 1270, it's perfect support. It's that soft target that we had highlighted, again, early in the week. I think it was here. It might be the missing piece. Yeah, here it is. Thursday's piece. So, nothing's changed. Nothing's changed. Levels are exactly the same. You drop your bullish, your bearish invalidation from 1304 at this point. I'd be definitely comfortable dropping it down to 1290. But there's the 1270 mark. There was the low. We're there now. Later than expected, not a long slope, but we're there now. So you've seen a nice little range take shape. You need a clear-cut valid directional break here. Either break below 1260, you look for a run on 1240, or my favorite move is, again, a sharp kind of rip lower. Maybe the dollar finds resistance again, rips higher tomorrow on a jackknife reaction, and then you look to buy that with a break above 1290 needed to get this thing go to the upside. All right, so look, you're in the downside channel until you're not. Wait for the breakout or look for the dip towards 1260 first. Any questions on gold? Okay. Any other questions in general? Feel free to post them on the message board. Again, guys, on behalf of myself and Jamie, I want to apologize about the little mishap we had with the site yesterday. Um, Everything's been reconciled and we're solid from here, so no worries on that front. Other than that, if there are no other questions from anyone in the crowd, best of luck trading tomorrow. Listen, keep it light. As far as leverage is concerned, again, we're just getting the October trade kicked off, and this is the nice kind of first buffer zone that I usually trade very light into as we get into the weekly opens and the opening ranges, and certainly I think it'll be a much more opportunities heading into the start of this month than we've seen over the last couple of days here. So best of luck tomorrow. Stay nimble, and I'll try to keep you as much as possible on SB Squawk. Have a great weekend, guys. I'll see you next week. Cheers.